Gold making a big move today as the markets across the board saw rapid changes in what's going to possibly happen with Fed policy down the road, along with all these new tariffs we've been reading about, now including Mexico. And market just sort of felt a little bit off coming in today, and then we got a big move higher in gold. Gold pushed right through the 1300 level, got as high as 1306, just below key resistance at 1312, which would really be the 50% retracement of the late February to early May high and low. So right now the market making a very, very big move. Obviously gold has been subdued, has been sort of beaten up and sort of lost favor, I think, due to higher yields in treasuries and equities outperforming despite we've seen the hiccup markets over there. And I think that right now gold is now certainly back in favor very quickly. It happened literally in a moment's notice. So price-wise, I think we are not yet seeing any, you can't say that gold is bullish momentum or it's off the bear train. It's really been 2 days. We've got a 2.5% rally in 2 days, most of that coming today. And I think a lot of that coming defensively, insurance-type buying. So let's wait and see what happens when the dust settles and where gold goes in the coming days. Obviously, with things changing, possibly with the Fed, that's really gonna give gold some upside. And I think ultimately that could cause some bullish momentum, but we're not quite there yet. And if you look at the dollar, which has been very strong, going back to the middle of 2018, it was down today, but it's still going to finish higher on the week. So it wasn't like it took away all its gains and turned bearish all of a sudden, despite the fact that we are hearing about rate cuts, despite the fact that we're hearing about the economy, despite the fact that economists have come out and talked about, rapid rate cuts coming as soon as September. So I think at this point the dollar still remains strong. It could find some lower levels as we progress forward into this possible policy shift. But again, nothing has been done. It's all been talked about. The markets certainly think there's a rate cut coming. We've talked about that for some time, several months even. But we haven't heard that from the Fed, and now we're just maybe starting to get some economists that are turning and now seeing the idea that maybe the Fed is going to be forced into doing what they don't want to do, and they want to remain patient, but certainly the markets are going to tell them something different. Now economists joining on. And I think that the speculator crowd, which had been sort of muted, they've been kind of slowly adding to longs up until last week, and then they all got out at the same time, and the market really tumbled. And I think that this move today, they probably reinitiated those longs. We won't know that until next week, but I think at this point it's safe to say that the speculators are back in, at least getting long or covering any positions that they had put on the other side over the past several weeks. And I think at this point, speculators are probably not going to be as influential as they are when things are quiet. Typically, when it's a quiet market, you can tell when the speculators start to build up longs or shorts, and that tends to move the market. Now the headlines will be moving the market, and the speculators may be chasing a little bit, which could exaggerate some of these moves like we saw today. So ultimately, gold is sort of out of the bear cave, but it's certainly not on a bull momentum wagon yet. I am one who has always been very bullish gold with the idea that it's great insurance for equities, great insurance for the dollar, great insurance for geopolitical risks. But over the last several months, we've seen that hasn't been the case. And now we've got 1 or 2 days of big moves. Doesn't necessarily build a trend. So let's see what happens when the dust settles. Certainly June FOMC and July semi-annual testimony to Congress from Chairman Powell will be very key events for gold as we look forward to the second half of the year. But right now, let's enjoy it while we can. We're back above 1300, nearing the retracement of the 50% retracement of the Feb to May range. And things aren't looking so bad for gold anymore. But again, let's see what happens when we open on Monday.